All right. Hey there. Good morning, everybody. Chris Franks with Texas West Capital coming at y'all live here just after 11 a.m. Central Standard Time on Friday, the 11th of October, 2024. I've got Fibba Swanee who'll be showing up here with me here today to go over some charts with y'all. Hopefully you're excited about that. As always, we try to get him on every other week, but that isn't always the case. The man has an important life. He's Superman. He does the Clark Kent and the Superman thing. So sometimes it gets in the way, and he can't do the other. But anyway, before we get going here, listen, we're going to talk about Fed funds rate coming up. We've got the decision coming up next month. We've got the PPI, which came out today. We had CPI, which just came out. We're going to talk about that a little bit. Show you again the charts that Fibbo has here and what he's looking at. But before we do that, make sure that you go ahead and hit the subscribe button to the channel here. Follow me. Follow Fibbo on Twitter. It's at Fibbo Swanee, FIBOSWANNY. So, follow us. Leave comments. Make sure they're nice. Don't be a jerk. World's too full of jerks, right? Why waste your time? I mean, is your life really that sad? Hopefully not, especially if you're here, right? Anyway, so leave a like, leave a comment. We'd love to hear from y'all. And I guess that'll do what I said there, and I'll bring this guy up. What's going on, Mr. Fibba Swanee?
What is happening? I am doing all right. Hanging in there. Actually, you know what it is? Being Superman and everything, it's really hard to find a phone booth these days.
That it is, right? That it is. It's not as common as when we were kids and they were everywhere, and we all stuck those nasty phones to our head, right?
Yep.
Back then, and you do the paid call to the parents, come pick me up from the skating rink or whatever. Well, you accept a collect call. Ready to come home.
Yep.
Something like that. But anyway, man. So I know, like last night, you had a great night. I saw some of the photos you put up there. We were kind of talking about that real quick before the show here.
I was saying that the world's upside down when Kentucky's getting Northern Light type stuff.
Well, I think we'd really be concerned if we were getting it down here in South Texas. Then maybe we really would have something to worry about. But yeah, man, really cool photos. If you guys haven't seen them, go check them out on Fibbo's timeline there, whatever you want to call it, his feed, his thing, man.
It was a little tough for me to see because I live out in the middle of the woods, so I can only see like little portions of it. But there's some people around me that got some really, really good pictures, man. It was pretty cool looking.
Yeah, I definitely think it was cool. I saw some people in Europe that were posting photos as well. That's why I was real surprised when I saw that you did it. But hey, whatever. I'm going to sit down here and live vicariously through all y'all up there that got to see it. So anyway, so CPI came in this week, came in a bit hot, core came in. Core had been 3.2 last 2 months, was expected to be, or the last month was expected to be 3.2 again this month. Went up to 3.3. So core CPI went up a little bit. Headline CPI was 2.5, was expected to be 2.3, came in at 2.4. So it came in a little bit hotter than expected, but still overall coming down. And then we got the Producers Price Index today, PPI, which came in doing the same thing basically. Came in a little hot, but still down from where it was, headline did, for where it was last month. But core, again, came out a little bit hotter. And I bring this up because this is all on the heels of the recent employment data. And, everybody wants to spend all their time, arguing about, the numbers are fake or whatever. It doesn't matter. It doesn't matter what you may think about that. The fact is, these are what the numbers are. These are what the Fed is basing its decision on. So when we look at, okay, what is the Fed going to do next month, in November, we have to look there and we go, well, hell, the Fed's going to look at is 100,000 more jobs created than anticipated. Unemployment ticked down from 4.2 to 4.1%, which again, by the way, guys, under 5% is historically full employment in the U.S., okay? So even at 4.3%, we're still historically fully employed, fully employed for the U.S., right? And again, you can get into the weeds and say, 2 jobs this and government hiring that and whatever. But at the end of the day, these are the things that the Fed is looking at. And by the way, we also had wage growth. Month over month, wage growth was up. So when you see that and you go, okay, if the Fed wants to, we want the Fed to do a 50 basis point cut again in November, but then you see that more jobs are created, unemployment's down, wages are going up. That's not a mixture there that says, hey, the Fed should be lowering rates.
Do you think they're kicking themselves for doing 50 basis right away and should have done only a quarter?
Well, that's what I've been talking about. I was listen, it looks like a quarter is all they really need. I said the only reason they may say a 50, they may do a 50 basis point. What I was saying before it came up last month was because they would say, well, we should have done a quarter back in July, and I can kind of see that. But even Jerome Powell said as much. He said in his conference, he was like, well, if we had the employment data at that time, we wouldn't have raised 50 basis points. So they came in strong. It spooked the market, right? How did it spook the market? The 10-year yield jumped up over 4%. Almost exactly at the time they dropped the Fed fund rate 50 basis point, it started going up. And that's odd, right? I mean, I was on Cardone Corner earlier this week, and Grant actually jumped in. Cardone Corners with Gary. His twin brother Grant jumped in there, and he was asking me, he's like, well, but they cut it 50 basis points. Realistically, shouldn't the yield have continued to drop and the price of the bond gone up, the treasury gone up? And I was like, well, yeah, that's what we would think. But this is exactly why I don't trade based on news. I trade on the charts, right? And on the charts said we should have get abouts, but when you look at, okay, well, why would they do that? Well, it's because the market doesn't believe the Fed. The market is concerned that inflation may rise again. And so now we got the unemployment doing that and jobs and all that. And then we got CPI this week and whatnot. So, 1 month up doesn't a trend make, but it definitely means we need to watch unemployment and jobs number next month, as well as CPI, PCE, all that kind of stuff next month to see if there maybe is a trend beginning to rise up there. And so, again, I think at this point, I think we could still get away with 25 basis points just because it's 1 month of core going up just slightly. Headline was still down. I could see maybe November being 25 basis point, but I think 50 basis points completely off the table now. It doesn't make any sense. And, it's a possibility the Fed could pause. The Fed could pause there in November.
What's the tracker saying so far? Have you looked at it lately?
I haven't even looked at it.
I haven't either.
The last day or so. Give me a minute. Let me see what it says here.
Curious.
Real quick. Yeah, let me pull it up here. What do we got? It says 13.4% chance of
50
of pause.
Oh, pause. Okay.
86.6% chance of 25 basis point. Absolutely nothing for 50 basis points. So,
okay.
I mean, it makes sense. I believe it was up to around 20 or 22% on the pause recently. I think before PPI came out today.
Yeah.
But still, slight chance of a pause, most likely at 25 basis point, unless something crazy happens in that time there. But
yeah, there's still time.
yeah, exactly. But this is kind of thing that I was, talking about back before the last one. I said, listen, if they come out of the gate with a 50 basis point rate hike, it's going to spook the markets. They're going to be like, the Fed can say all they want. Well, we should have done 25 back in July, so we're just making up for it here. But the Fed's going to go, holy crap. Or not the Fed, the market's going to go, holy crap. There's something going on with the Fed. And we saw that with a lot of hedge funds in their notes that they were sending out to their investors, talking about how the Fed was behind the ball and was screwed now and whatever. And so, whether that's going to continue or not is one thing. I think we're probably going to see a pullback in that 10-year here now. But nonetheless, it got the reaction that I was talking about we'd probably get from it. Mortgage rates went up. Mortgage rates went up. Everybody's like, yeah, Fed rates down 50 basis point. Mortgage rate's going to drop. Nope. All the 10-year right up, right? So, interesting things you have to worry about when you follow news events, guys. But like I said, 1 month, these things going up, the core numbers going up slightly does not a new trend make. If they go up again next month, then even then it doesn't guarantee, but then you're really going to have the Fed concerned. If you're doing 3 months in a row, then I think you really got to go, holy crap. And these are like small little incremental 0.1% if you're doing that. If we had some huge jump next month after this 0.1% this month, that wouldn't be good. So that's kind of where I'm sitting with all that. But anyway, so there we go. Let's pull up some charts here that Mr. Fibaswani has. Let me see if I can throw us down here a little bit somewhere.
Yeah,
good.
Let's start with Bitcoin, see what's going on with that.
Yeah, man, look at that move.
Yeah, got a nice move. Like we were talking offline before we got on here, a little bit more than expected, but I'll take it for sure.
Yeah.
Getting the support off that. But this is the 4 hour, and we went into the bear zone on Wednesday on this large red candle to the downside, kind of triggered it, went into that bear zone there, got some momentum for the bears, and worked its way down. I had 2 limit orders in. I had one right here where it says target hit. I had it at 59.5. I just rounded up.
Oh, these were limit buy orders?
Yeah, buy orders on the downside. Because these are 2 levels I was looking at to buy while in the bear zone, and still in that large period of consolidation that we've been in for 6 months now, and people are ready to jump off a cliff because patience is being tested.
Very much
definitely. So. But we got that one filled on the wick down here. Got down to 58.8. So I was filled at 59.5. And where that comes from is when you did the bull zone here, I don't have all the fibs on here, but this candle right here hit this area down in this area right in here. So when this went into the bear zone, the first line of defense is that 140, the 127 to 141 zone, and that's between 59.2 and 59.7. My target came in at 59.5, which comes back from a beginning of a threshold back here and kind of an area of support on the chart. And that's where that came from. I had another limit order in here down here at 57.1, which is the 200%. And that was if we got 3 consecutive settles underneath this 59.2, that would have been the next target for me to. And I was willing to take the risk of buying some there and averaging it out. So I'd be about a 58K average if they both would have hit. And I'm fine with that. I think my line in the sand is real. There's 2 things. I'll show you on the weekly chart for one, but my line in the sand of all of this would be a monthly settlement under 57K. If we get under 57K on a monthly settlement, then we're gonna have to go back to the drawing board because that's gonna be some ugly corrections if that happens. I don't think that's going to happen. I think we're getting a lot of support here and there, but that's why I was willing to take the risk with those 2 buys. But I got one in here, and we're kind of off to the races a little bit on this one, trying to get some momentum built. I like that the green positive directional index crossed here, but even though we're not getting a lot of ADX is going the wrong direction at the moment, but that could totally turn around because it's still measuring 26. So even though the ADX is slipping a little bit, it's in that 25 to 35 zone that I like to see. And with the green positive directional index crossing there on this latest move to the upside because of that large price movement, that might be that first sign that we can find some support in here and get this thing going. Now, we're not in a bull zone yet, and I don't really have a take profit target on my last buy because the way I was setting this up was if I got filled on the downside while in the bear zone, I was going to hold it, and then I'm going to press the position. If it gets into the bull zone, I'm going to add to that position, and then I'll have some take profit levels when that hits. So I'm willing to kind of float this and see if we can get into that bull zone on the 4 hour.
What's the bull zone level there on the 4 hour?
The bull zone is at 63.2. So if we get up to that 63.2. It'll flip, and then the first profit taking, if this goes into the bull zone, would be 65.7. So my buy at 59.5 would be my sell target is 65.7. And then if we go into the bull zone and I get bought there, then I'll have to reestablish a new zone, which would probably be, I'll rough it in real quick, because if you go in this, kind of go back in history here, I'm just roughing it in. We'll get a roundabout number. It's going to be between 67 and 68.4, or 67.5 and 68.5 basically, and then above that will be the 72.3, which would be kind of pressing up against those previous highs. But that's what I'm kind of looking at on the 4 hour if it's going to happen.
Previous highs, he casually says. He means all-time highs.
Yeah, all-time highs. And off to price discovery. That's what I want to see.
There you go.
But really, when we're looking at 63.2 right here, and that's kind of where this trend line comes into play too. So if the price gets up to that level and it doesn't look like there's a lot of momentum being built with that price movement, I'm likely to take profit on the one I bought at that target at 59.5. But we'll have to see, because if we get up to that trend line and there's momentum behind it, I'm just going to wait, because it'll probably break and then go forward from there. And then we can get let me pull up I never remember where things are on this freaking
I know, man. I know.
They change it all the time. All right. Here's just roughing in where if it does, like if it went up and broke right now, I mean, you're looking up around almost 70K. So it'd be nice to get above this trend line and get some things going. But that's what we're kind of looking at on the 4 hour, which is good. But then when we flip over to the daily went into the bull zone on September 18th. And when you went into the bull zone right here, you would have been buying roughly right around 62K. You would have been underwater a little bit here, but now you're back just above water from where you would have bought in, because this movement right here, you were already well above the previous shallow fib down here. But a couple of things with the daily is I had two other buys in here. And if you're following our group or my group or even the trading group that we have now, one of the trades I have on, I'm 30% long BTC on the daily. So we bought down. I don't have all the fibs on here, but we bought down here in around 53K.
Yeah, I remember that.
And then we bought another level, and then we went into the bull zone. So I was kind of buying while in the bear zones, and then clicking into the bull zone. I'm kind of pressing the position, sort of like what I'm trying to do on the 4 hour. And it's working so far on the daily. And I think my average is 59.7 roughly as an average. So 59.7, we're in the money when it comes to all of them together as an average.
Yeah.
So I'm holding that 30%. And then each one of these targets is my target for a 10% tranche right now. So the ones I bought back here at 53, the target for that is at 67.9 right here at the 200%. Didn't quite get there on this move to the upside before it came back down, but it is holding the bull zone here. So that's why I was kind of comfortable buying the 4 hour while the daily's holding that bull structure. And then the next level beyond that is when you look at the fib extension, because once that I got that target, and then you'd move out to this next target, which would give us the extension of 73.7 to 76.5. But that previous high kind of touches right at just inside that zone.
Yeah.
So I'm gonna look at 73.8 as that next level. And then once that fills, and what I'm hoping happens is if you move the fibs up here and that target actually hits, then the shallow fib's going to be at 68.2, which is just above that previous target here at the 200%, which should become support. So I would like for it to get up to that 73 or so, and most likely trying to break into highs. You're going to get a lot of selling pressure, before, unless people will just say, screw it, and then we're just going to let it go. But most likely you're going to get up to that 73 and then work your way back to 68. And then there will be another buy at the shallow fib. And then we're off to the races. And then once this hits as a target, the 200% becomes the next level. And that's around 87.8. So that's what I'm kind of looking at here on the daily is I got my profit taking targets, but I'm also going to be adding anytime we get up and make a new high. Like if the market gets above this high right here and it works its way up and then comes back down to the shallow fib, I'll keep buying on stair steps. So if just say it gets up to this target and then 64.5 would be the shallow fib. So if it dipped down there, I would add positions and look for further out take profit targets. So, but the main thing is watching this for sure that it doesn't go into the bear zone. Now the number right now is at 58.9. So it could actually go all the way down to 58.9 and still maintain the daily bull. So there is that movement to the downside, but I feel like this latest low at just under this 59,174, which was the start of the threshold on my fibs there, found some support. So that 59.1 should keep some buying interest around that level, which is above that 58.9, which is going to keep us in that bull run. Now, of course, if it gets down to that point and starts breaking down into that 58.9, as you said before, I'm at a 59.6 average. So even if it comes all the way down and gets into the bull zone or into the bear zone, I might break even, maybe take a little bit of a loss, something along those lines.
Yeah.
But that's the goal, right? The goal is always to limit the losses, keep the gains going, that kind of thing. So
right. It's about the system. It's about not the single trade you're on. And I hope you guys are picking this up, because when Fibbo talks about it, you go, oh, okay, he's got a system, blah, blah, blah. But you notice Fibbo's always talking about his system in general, right? He says, well, on this trade, here we are, but here it's part of this bigger thing. Yeah, and I think that's the thing a lot of retail traders miss on, is they always sit there and they focus on the profit from that one particular trade, rather than understanding it's about the totality of the trades they're taking, which means what? Like you just said, it means you limit your losses intelligently. You let your runners run when you can.
Yep.
And you do it.
Yeah, because the runners will offset those little losses over time.
Yeah.
And it's also when you start it too. Like if you bought in, like if you missed the first two trades and then you're only long the 10%, you're going to be long 10% at 62 versus an average of 59.
Yeah.
So it also depends on when you start too, because sometimes you'll start and then it'll hit you out and then you'll take a loss and you're like, well, that sucks, But it really isn't a loss if you would have been in earlier. You know what I mean? So
right. Really, it just that kind of pushed it all to that whole idea of laddering in and laddering out, right? Yeah. You ladder in, you ladder out. Yeah, it kind of raises your average entry and decreases your average exit. But at the same time, it makes it much more likely that you're going to lock in profit. And if you're doing that consistently, we go back to what we were just talking about, which is the key, right? It's about consistently locking in profits.
Yep, exactly. And of course, it takes out the emotion, and it takes a little bit of patience, and there's a lot involved, but it does take the emotion out, because if you stick to the plan, you don't care what's going on everywhere else. If there's something major going on, the price will let you know.
Yeah, exactly.
And you got safeguards in place for that to happen. All right, and then going on to the weekly, there's a lot on here, but the main thing is I'm really watching this bull zone on the weekly, and it's still holding, which is good. So even though we came down to the low here, just like at 49,050 here, and maintained that bullish zone, and then we've been rallying ever since. But there's a bunch on here, but a couple of things I want to show, which is kind of interesting. If you look at the low here, if you go the low before the rally, so if you go right here, and you get this cycle, you had another low right here before the rally, because you had a little bit of a correction here.
Our last correction, that other 6-month correction, yeah.
Yeah, it was another, exactly. the boring time of going back and forth. And then if you go another cycle over, you get another low right here. That's before the rally, and that's where we're at the moment. Is kind of working our way up now. If you take the low here to where the high was made right here, is 33 bars. So if you take from where we started here and you go 33 bars out, you're looking at March of 2025. Could be kind of a good time period to get to a nice level, to price discovery, all-time highs, those kind of things. So the way, it's not perfect Elliott wave, but this is the way I kind of looked at this, was if you had this first move to the upside here, and it was 102% move on that, and then you had this longer wave here, and it's really not a 1, 2, 3, 4, 5 really, I guess it could kind of work out maybe. Yeah. I didn't dig in to see if it worked out, but I was just looking at the percentages. This was 196% move on this one. Mm-hmm. But what I was looking at is if this holds here at the 49.50, I think the minimum would be this 102%, which would give us right around 98K or just under 100K.
100,000, yeah.
And that would be pretty nice to get a nice little movement up to that point. Now, if it wants to extend further all the way out to the 196%, then you're looking at 147. which I don't think is out of the question.
No.
I don't know if it'll get there by March of 2025. That would be the bare minimum earliness of getting there. I think I have a lot of models that show, October of 25.
Yeah.
When we're probably going to be hitting that 140 to 150 range. But the one thing I like about this is when you take this percentage and you look at these fib levels that I have from various areas, this 98K matches the trend-based extension here at the 100%. It also meant just underneath the fib extension here that comes from the low to the high here. So you're looking at these all in confluence with each other, which I like. So that's kind of a nice target to the upside. And this is just like a little tornado tunnel like you see on weather reports. Really. This is the area that's going to be affected. So I'm hoping that this kind of keeps working in this little realm in here on the way up. And then the red one here is my actual threshold. So I'm looking, this is where the threshold started. So I'm kind of keeping an eye on the bear and bull zones. But the bare minimum of this move to a new high is at 80K, which I could see that 80K after we make a new all-time high could definitely, find some selling interest. So I'm kind of looking at the 80 to 85 because I've looked at some other charts, and I was saying with Chris earlier, I recorded with Crown this morning, and I laid out a lot of the really long-term charts, like a lot of macro looks. And when you look at a lot of different macro time frames, you're looking at like 85K and 122K as some really key levels to watch on a move to the upside. But I wouldn't be surprised for it to go to 150 for sure. So
wouldn't hurt my feelings at all.
You what?
Wouldn't hurt my feelings at all.
Yeah. Wouldn't hurt I wouldn't be surprised if it did. I'd like it, but I wouldn't be surprised if it went that high. So that's what I'm kind of looking at here on the weekly. But really, the main thing is watching that bull zone. Now, bear zone right here is 51.6. So you could go all the way down to 51.6 on the long-term basis and still maintain that long-term structure. Now, the 4-hour and the daily will get stopped out. Yeah. But then you'll rebuy the daily, most likely around that 51 or so, and then hold that bull zone on the weekly. And if it doesn't, then you get stopped out on another little loss. And to be honest, if that happened right now, that would be very, very ugly. And the timing of it and the pattern of it just doesn't make sense. It really doesn't. But it is a market. Things can happen. Who knows? But right now the structure is definitely there for more upside movement. I agree. And then going on to the just looking at the monthly, definitely in the bull zone. We had this nice little run to the upside. The buy was right here. You sold at the target, and then you rebought at the shallow fib at 55.7 on these wicks here. And then the target for that is up inside this zone, which comes from the trend-based extension, and that's where that 85K comes from, inside the zone on the monthly. So with this low on these wicks, all these wicks right here on a monthly basis are pretty bullish looking. A lot of buying interest coming in on each one of those months to keep us, settling above that 58 area that everyone's, kind of looking at. It's like, yeah, I can't wait for it to come back down to 50K so I can buy some more. And I said, no, you should have bought 50K when it went down there in the first place.
Exactly. You should have been in there. And I mean, if we're looking at this, you've got that large candle over there running up into the current consolidation. So you've got a large fair value gap there. And that 49 pullback looks like it pulled back into the premium area of that. So
exactly. And it actually worked really well because the 48.5 was right smack dab in this fib extension level.
Yeah.
Right in the middle there, and it absolutely hit it perfect. And for what I look at in my fib stuff, that means a lot to me on how that matches up, because this fib, this extension right here is based off the start of my threshold here when it went into the bear zone. So nobody's really kind of looking at that range because nobody's starting their fibs from there. I mean, that's just not done. I mean, it's done the way I look at it, but it's not done the way. So to me, when that extension hits just nice right in the middle of that, that's a good deal. And then And then once this green candle got up here and it broke this level, the 200% became a high probability target of hitting. And of course, it went way above that. But that's fine. I mean, the move from here to here is a very good profit. So now it's the being long from here and working our way up to 85. So given all of that, one of the long-term charts that I showed with Crown was the annual, which I think is a pretty interesting chart. Because when you get back into here, you get 3 years up and then a 1-year correction. So when you look at this, then you get 3 years up, 1-year correction. And right now we're on year 1, year 2, and we're getting ready to finish year 2. And hopefully we get that 3rd year up to get us into that, the 122 to 150 range all the way up to the on the cycle there. So if you look at this, you get the high on each one of these years, high to high to high, and then the high here. So you're looking at, I don't know when in 2025, but in 2025, like I said, earliest would be March. Like if this thing just went gangbusters for some crazy reason. And I'm not saying that can't happen. You start getting into these upper levels and you get short stop, your shorts are getting stopped out and you're short covering and people getting FOMO and who knows what. You could be at 100K before you even sneeze.
Yeah.
I mean, it really could just launch out of here. That's why you got to have some kind of exposure on prior to that happening, because you don't want to miss out if that happens. But given that, I put all these fib levels in here just some looking at some stuff. From the low to the high on all these. So what I did was I just did the low to the high and then went down, because each one of these went down around the 61.8% level.
Yeah.
This one went a little bit lower. This is kind of where everybody was like, oh, it's going to zero, that kind of stuff. and then it went up again, and I did it, and then it kind of, this is where it went to around that 15K or something, right around there, and then went up. But it was kind of the other thing I was looking at was on the moves up here, when you had the 1-2, this move right up here to get that 3rd year, or just the movement up. Once we crossed that 61.8% level to the upside, we got that move to the high, and then here it broke the 61.8% and then moved up to the high. This is the area that we're kind of in at the moment. We're at that. We're in that area consolidation and waiting for that movement to break out, right? Yeah. And I think that's kind of where we're at. And then once that happens, that's going to open up that, breaking through that 61.8% level, and then we can move up to the 100% or up to the 0%, which I have at 125, which matches kind of my 122 area on some of my charts. And what I did with that was this, once it broke up above that level and went to the high, this was a 156% move. And then this one was 156% move from the 61.8% to the high. But this one was 127% move. So I just kind of took the 120. This one's like 121. I guess I could have moved it up a little bit more, but I was just using this as a proxy of where it could head. And that 121 puts us up around that 124, 125, somewhere around there. I know it's not rocket science, but I was just kind of looking at it as if it does break here, I wouldn't be surprised to have that 121% move from where we're at up to that level from now until sometime in 2025. Most likely the latter half of 2025, but earliest would be March. So I just thought it was an interesting. I know it's not real in depth, but it's just 3 up, 1 down. If it wants to keep that pattern, then we should have a nice 2025 coming our way. Is what it looks like. So that's what I got for
no guarantees.
yeah, no guarantees. This could drop right out of the sky. You never know.
Right, but what do we do as traders, right? I think a lot of times new traders come in and they get hung up on past performance isn't indicative of future performance. But, as old traders, you and I, we've been doing this a long time. And generally speaking, when there are patterns that show up for, over and over again, we tend to give it preference until it shows us that it's not. And it doesn't mean we just blindly trade it. But like in this case here, we're going to say, okay, well, it's always done this in the past. So we generally kind of expect this at least to continue on. Now, we don't sit there and go, okay, no matter what, we're just going to blindly say that that's what has to happen. But it's something worth watching, right? So you kind of tone it down there. Like we say, well, I know it's not really, whatever. But at the end of the day, that's what we do as traders, right? We find the patterns. And if the patterns are consistent, we give weight to that pattern until it proves that it's not anymore. But even then, we still use that, that proper risk management.
Yeah, and people will have your line in the sand, which you should, like your protection. Yeah. And in this long-term case, as you can see, the 61.8% levels at 58.2. And if I looked at some of the other charts, like on a monthly or those longer-term charts, if we get a monthly settlement, like if we get to the end of this October and we settle below 57K, that's going to basically say, okay, we're up above the 61.8% level here. But if it comes down this month and closes back below that, that's not good. That's your signal to say, hey, maybe the history is not going to repeat itself, because it's sort of like an EKG to a doctor. Like if you're looking at the heartbeat of the market and you see how your heart's going, and in this case, the market's going, and then all of a sudden you're looking at the EKG and it's doing something a little different than it did in the past. If you were a doctor, you'd be like, okay, let me check your heart because something's going on, right?
Yeah.
Well, in this case, if it's starting to do something a little different than it did in the past, that's a red flag to dig in a little deeper, do a little bit more analysis, get your protection on, that kind of thing. Like something's going on, prepare yourself and use risk management to make sure you don't lose your ass because things are starting to change the other way. So,
right.
But right now everything's looking good. It's breaking above that level. We're hopefully getting some buying interest, pushing up against some of these resistance levels on the other time frames, and so everything's looking good at the moment. But again, not guaranteed. That's why there's risk management, and risk management becomes first versus everything else. So as long as you have that in place. So that's what I got for Bitcoin. Unless you got anything you want to show on BTC.
No, I mean, I'll pull up something here real quick.
Anything in confluence to some of the levels I'm looking at would be great if you had it.
Let me see here. Let me pull this up here. Let me see here. So, I mean, basically, I've been talking for a while now when we talk about Wyckoff and we look at the accumulation or reaccumulation ranges. Usually when we're getting ready to break out, we'll have a rally up into the upper end of the resistance. We'll pull back and then we'll get a breakout. That often aligns with a wave one up into the all-time, in this case, the all-time high kind of area resistance. Wave two pullback. Wave three is the working wave. That's where everybody jumps in. That's the participation wave. And that's usually the one that breaks out into that new all-time high. So for me, the way I look at this right now, excuse me, this is all kind of corrective movement up here. I've been talking about this. So to me, it looks like we've got a 1, a 2, a 3, and a 4. And we're making a 5 of this leading diagonal. Breaking out above this swing high up here, it's 64,461. This is the Bitcoin all-time index chart here. But whatever your chart is that you're looking at, if you're breaking out above that swing high there, it's right around Monday, October 7th. Breaking above that adds confidence to this count here. And if you take out, and based on the height of this here, that actually gives us a target of 71,616, which puts us, by the way, above the last lower high for this bearish market structure off the all-time high. It takes us out above that, so that breaks that bearish market structure. Now we have bullish market structure off the bottom. We've got a high, a low, a higher high, higher low, and then we'll have a higher high above that. Just prior to the wave X of wave 4 swing high. So that X is going to work the same way as this B. If we get above this, which on this chart is 71,680 and 23 cents, if we get above that, that adds confidence to the idea that wave 4 is complete and wave 5 is in progress. So things look really interesting. So you get this rally up, you get a throw over on this wedge resistance, you get a sharp, so it should be a sharp move through the resistance, rejected, sharp move back down. That's the way most wedges work. So you'll get that sharp move up, sharp move back down,
and then
maybe down here toward this. Yeah, maybe down here around 60,800 or so. And then, if you're not long yet, you would be looking to get long at that point when it does that pullback. You'd be looking to get ready because then you get that breakout into that new all-time high there. So, for me, we've got this rally off this local resistance here. By the way, this is a 50% pullback in 3 waves. It does appear. So it does appear corrective, 50% pullback. Bullish divergence here on the 12-hour. Bullish divergence on the 4-hour. Bullish divergence here, even locally. I don't have it written here, but on the 1 hour as well, all leading to this rally up. We're right here at the hourly pivot. Definitely want to get a move above there. So, I mean, overall, to me, looking pretty good. By the way, hidden bullish divergence on the daily. So there's a ton of confluence here that we're basically the daily pivot is still holding as support. Yes, we have, we closed below it 2 days ago, and then this large lower leg pin bar doji here closing below it yesterday. But then here we are, huge bullish engulfing candle taking us right back up over those last 2 days. This is a great move up off this, this kind of support area here coming up. So, I like it a lot. We've got a lot of room on the daily here. We're about to cross bullishly on the SMA. We did cross bullishly. We're bullish above neutral now on RSI, stochastic RSI. We're about to cross bullishly above the SMA and then threaten to break out through the oversold. So it looks like we've got a chance to really kind of make this move up and then look for that rejection and pull back. The only other thing is if we don't get the breakout above here, this is something else I've thrown around a few times. I don't think it's going to happen, but wave Y can be a triangle. So we could have ABC down as A, ABC up is, WXY here is B, potentially ABC is C, and then 3 waves up, a lower high below this wave 3 here as D, 3 waves back down probably to the daily pivot around 68.41 as wave E. And so we could actually have the finishings of a triangle here. And if we have that, then we're going to have a huge move, a huge volatile move we should have up through into the all-time high. There won't be a rally into it and a pullback and go. It should just then at that point break out because at that point we will have been consolidating in wave Y here. Wave Y started back here at the end of wave X in June. So again, there's A, there's B, this would be C, you get a D, and you get an E. Continue with that consolidation, and you get a move up. Honestly, my personal thoughts are that triangle would be the only way we'd most likely get a breakout to new all-time highs before November. I think if we're doing this leading diagonal here, November, maybe even after the election before we get a new all-time high, because you've still got to make the move up. You have to make the pullback, then you have to make the move up again, and then you break out. And that's going to take a little bit of time. But neither one of those scenarios to me are bearish at all.
Well, that's what I like to hear. Not bearish. Let's what else we want to look at?
What else you got there, man? Yeah, man. Toss it in Ethereum. Piss people off. Toss it in Ethereum. Tell them it's going up. That'll upset people.
It's not going up. It's right now it's still in the bear zone. It tried to get into the bull zone right here on this move to the upside right here. But didn't click enough for me to buy it. And as you can see, the ADX pretty low. Not a lot going on, just kind of sideways to lower, really consolidating between this little zone right in here. So for me, just like on BTC, I have 2 limit order targets on the downside, one in the fib extension zone and the 200%. The BTC came down and hit its zone before it started rallying. This one didn't even get down to the target on this move here, even on the second move to the downside. So I'm out of ETH right now. I've just been kind of waiting for the target to hit or a new bull zone. New bull zone right now is at 2504, basically 2505. So it would have to get to that point. And then, of course, it would have to have 3 settles above the 2437. There's been one. We're on the second one right here. So if we get 3 candles above this, and then it goes into the bull zone, it'll be an immediate buy with a target at 2644, which would be the start of the threshold. So I'll keep an eye on that. But right now, I've been
just
flat.
waiting.
Yeah, just kind of waiting on it. And then when you look at it from a daily basis, that's also in the bear zone. I've just been kind of waiting. Got the 2 targets on the downside. I just put this trend line in here. With it breaking the trend line, it came back down here. I'm not a real big fan when that happens, but with it coming down to that point, going into the bear zone, low momentum in that period of consolidation, I'm just holding and waiting. The bull zone for this is at 2641. So I'm just kind of waiting for it to get on out of here, but kind of boring. I mean, it would have been nice to get down here and get, the first target filled. But for some reason, ETH didn't sell off as much as BTC did. But let's go on to some more interesting stuff like gold.
Gold, man. Gold.
Actually, I just got a buy signal today on this green candle right here. It clicked into the bull zone right here on the 4-hour. And once it clicked in, you bought right here. I was filled at 2667.50. So I bought right there. And then my first target is just inside this zone here. So when you look back, this is the best fit that I got. And the target's at 2682 is where my take profit target is. Almost there. It's trying to push its way up there. The shallow fib is currently at 2669. I'm in at 2667. Or no, what am I at again? 2667 and a half is where my fill was. With it moving up like it did, if it comes back down to the shallow fib, I will add position. And then I would sell 10% here off that first buy. And then the next target won't be up in there up until 2717 if it dips into the shallow fib. I mean, if it rallies on up, I'll buy wherever that shallow fib is. It just depends on what kind of high it makes. But so far, we're making good money. Nice little leverage on a futures contract. So it's pretty good movement. I'm letting it run right now. I don't have any stops in or anything like that. Right now, the bear zone's at 2621. I don't think I would let it go that far on that movement. Just because the exposure I have on it's a little high. So I probably won't let it go all the way to the bear zone. But we'll figure it out as it goes. But right now I got some breathing room at the moment. On gold on the daily, I don't have any positions on anymore. I had some really good trades in here, but I never got back in, and I just never messed with it because I kept trading the 4-hour and I never really cared. But if you got into this and you've been long, it's been bull zone for a long time. And I've been waiting for the 2737 target to hit. Still hasn't. Almost got there, but I think we'll get up there. So that 2737, when you look at it on here, I'll definitely get filled on that. And it would put us above this 20. What was it? 20? Yeah, 2737, which if you're trading the 4-hour, you're going to get a couple of trades in there and make some good money along the way. And then, play around with the daily if you want, but gold's definitely looking long-term structurally bullish. And people are buying those dips. So, and I'm one of them. When we get into it's not a dip because, I didn't buy the low. A lot of people are like, well, look at all that market that you missed. Well, that's just the way it goes. I'm not in it to buy bottoms and sell tops. I'm just, to me, that's an act of futility, but
I mean, that's generally speaking, as a trader, what you want, guys, you just want to consistently lock in profits. You're not, as a trader, you shouldn't be focused on trying to catch the low, the lowest point. It's just an event, or the highest point. It's an event. You got one chance to do it. So your odds of getting it correct are significantly reduced, right? But like if I go ahead and pull in my chart here, I've got a chart, my target is pretty close to your daily. I've got a 2762.90 target up here based on the height of this pullback, right? So we've got this pullback right here. Boom. And there you go. And so we've got that. I was looking at maybe a triangle here, but it ended up being an A and then A, B, C, D, E. So wave B was the triangle. Wave C was here. And so what I'd been telling people was, listen, if this triangle, which I thought might be the whole thing might be a triangle, I said, if it breaks down below that, we'll look to target the pivot and then rally up it toward this R1 pivot area. Or if we were just to break out, we go to the R1 pivot. So, I mean, we've got a nice move up here, this daily gap up into today, making our way. I had to get above, for me to add confidence to this, I had to get above the end of the triangle here, which was 26.7920. And we hit 26.79 so far. So a 20-cent higher move will signal that this should be complete. And we're headed up there again, pretty close to what you have here on yours on that daily.
Nice. I like it a lot. Actually, I'm got about a few minutes. Let me go on. Let me get
Go ahead and jump on it.
Yeah, let me do SPY real quick.
Woo,
Actually, we had a couple of good trades in here, to be honest. We went into the bear zone right here, but even though we went into the bear zone, there was this previous shallow fib here, which, you know, if it goes into the bear zone, one of the things we have to have is 3 settles under that shallow fib, which never happened. So even though it went into the bear zone, if you were long, you held on to your longs, or at least kept some exposure on as it consolidated here, and then started to take off again. But as that happened, I was flat, and then we went into the market here, went into the bull zone. It actually dipped down all the way to the fib extension, which, you know, that's that first line of defense for me. Found some buying interest, came back up, held the bull zone, which was good, and then started to take off. So if you traded this, you got in long, you sweated your ass off for a few days, and then went up. Then it hit the fib extension level in here. So this right here would have been profit on this move from right here. I don't have the line in there, but the profit would be right there. And then once that happened, once you get 3 consecutive settles above the 141%, which was at 58.2675, then you rebuy it with the next target at 58 up here at this next target up here at 5,800 or so. So I bought there and just took profit literally about an hour ago, or maybe 2 hours ago, and took profit. And now the shallow fib's at 58.28. So if it dips down to that point, I'll buy again. And then the next target will be 59.21, which comes from the trend-based extension off my threshold there. So now one thing I wanted to show that previous shallow fib there, but what I would do now that we made new highs, that this actually comes up to this point. So this shallow fib right here is still going to be that major line in the sand. So even if this dips down to 57.69 and goes into the bear zone, the 57.30 is still that line in the sand. So if it goes into the bear zone, I would want to buy at 57.30 at that previous shallow fib, and then if it gets through it, then that's when you would want to stop out and do something else. But a couple of good trades in here. We had some really good trades over here, but this one's been a little different, a little more patience. But so far, that was a nice little trade, and I'm just waiting to get back in. I had this down here. If it would have broke the previous shallow fib, that's where I would have ended up buying on a correction, but it never happened. So we're still on that bullish move to the upside. And then when you look at it on the daily went into the bull zone. Been long there, and I have a target of 59.43. I've just been kind of holding that one, and where was I filled? 57.85 is where I was filled. I got 59.44 target on that. So the 59.44 is actually 59. Oh, I had it just above that one. I should have been the other way. I'll fix that. But 59.44 is where I have the limit order so far. But nice little bull run. Got some momentum behind it. I wouldn't be surprised if it gets up there in the next few days, into next week. I like the structure there. The Dow Jones on the weekly bull zone went into the bull zone right here. You would have been long. Target at the extension. The previous extension was at 41.90, 41.9 here, and that's where that target was that I hit here on this move. And now that we had 3 settles above the 141, above 42,173. We're on the third settle. So if we settle this week above 42,173, it'll be another buy with the next target at 46,253.
So I'm talking about.
Yeah, so that's what I'm looking at there. And then when you look at the Russell, Russell's been in the bull zone. First target's the extension, still hasn't hit. Went into the bull zone back in here. Just been holding. Just waiting for it to get up to that previous high that falls right into the extension. That would be the first target. Then we got a couple other ones up here. The trend line break objective, and then the 200%. So still bullish on the Russell. Bull zone there. Bull ADX still showing some bullishness there. Not it's kind of low, I guess. It's at 15.
Well, it's going to have a little trouble right now because, the whole interest rate thing, what's going on with the Fed funds rate, whatever. So
sideways to higher, put it that way.
Yeah.
And then a couple other ones I was looking at. Alibaba was one I was trading. The nice move. The target hit, filled the gap. There was a gap over here that fell right nicely inside the zone because that's the area I was kind of looking. It actually filled pretty nicely. It only traded just above it and got me filled there. Has not hit my shallow fib here yet. I had an order in at 104.50 on a rounded up, and I think the low was 105.62. So I kind of missed that. Not to say that it can't get there still, but that's where I would be buying. And if I do end up getting the buy there, the next fill matches the trend line target at the 200% at 143. So nice little trade. So I'm waiting to buy back in on that. And then the last one is MicroStrategies.
Yeah.
Bull zone target hit, 3 settles above, bought again, right. I think it was right around 190-ish or something. I can't remember exactly. Bought again with a 215 target. Yeah. Almost there. So, and then again, if this comes back down at the shallow fib at 184, I'll buy more, and then we'll figure out a target later on, which comes in from looking back in history, which they're getting into price discovery here on this move to the upside. So,
the price discovery locally, I believe it's still below the 2001 swing high up there, all-time high.
Oh, okay. Yeah. But that's all I'm looking at the moment.
I like it, man. I like it. And just in time. I know you had to get going here. So.
Yeah, I had a pretty hard stop at 1 o'clock. So it worked out pretty good.
Hey, man, I appreciate you stepping in with us as always, man. And, just so everybody knows, we'll try and get Fibbo back here in about 2 weeks. I'll let you know earlier that week if he can make it or not. And usually if he can't, he's up within the next week or two. So I'll keep you guys updated with that. By the way, you can get on our trades here, guys. Join us at TWCTradersClub.com. You'll get my trades, Fibbo's trades, Andrew's trades, Vince's trades, market analysis throughout the day. You'll get my market wrap at the end of the day. Just tons of stuff going on there to keep you understanding how to look at markets and whatnot. I'm not going to jump out of here yet. I'm going to look at a few more charts.
All right.
But y'all make sure you follow Fibbo, okay? So at Fibbo Swanee there on Twitter. Check him out.
Thanks, Chris.
Appreciate you, buddy. Take care, man.
All right. Later.
All right, guys. Hopefully you enjoyed that. I've got a few charts here I'm going to pull up since Mr. Fibbo Swanee had to jump out of there. Let me see here. Real quick, my gold chart here, just so you guys can see. Let me figure out what I'm going to do with this here. I already talked about that. Yeah. So anyway, again, looking for this to continue moving on up toward that target area. So nothing surprising. Somebody asked about others. Here's my others chart that I've had. Basically, we got a wave one up, and it looks like we got a flat correction here. 1, 2, 3, 4, 5. Pulled back almost 78.6. We're rallying here. We've got 1, 2, 3, 4. So again, others here looking kind of like what I'm looking at with Bitcoin, which is a leading diagonal, right? So you get this this wave one here, wave 3 up there, wave 2 on the low here, wave 4 there. And so you kind of get a wave 5 up and then a pullback. Generally speaking, price should, get rejected prior to the pivot on the weekly here. By the way, this is the weekly. So we should get, 5 waves up, 3 waves back, and then boom, your third wave should be the breakout there. So locally here, this is, this is what I'm looking at. We got to get above wave B up here at 13.66%. We got to get above that to indicate that, to add confidence to this count here and say, okay, we're heading up higher from there. But overall, definitely not looking bad. We can zoom into the daily here. Let me throw this, make sure this is on all intervals here. Intervals. Let me see. There we go. So we are the daily doing its work here on the support, the daily pivot. I like that. So again, ABC, ABC, AB, probably going to see up here. Based on the height of this wave 4 pullback, we look for it to break out up here toward about 11.1%. That gets us about the 38.2 retracement. Low volume node. It makes lots of sense where it's at here. Previous kind of support area. Let me throw a line in here. See how it's support all in here, and here, and here, and resistance, and support, and resistance, gapped up through it. So very significant area. Makes a lot of sense to kind of hit that area and then pull back. And so if we do that, yeah, look at that, 50% pullback right around the daily pivot. So I like that. So we get a wave 1 up, 2 pullback down here around 9.95, 94%. And then we head up there. So certainly not hating what I'm seeing at the moment. On the others chart here, MicroStrategy, real quick, let me pop this up. Here's something I've talked to you guys about before. Again, I talked about this being reaccumulation here. Volume, price action seems to be fitting. Again, the idea that this is a triangle. Let's see if I can make this show up a little bit better here within this range. So, I can take that off there. But yeah, you got this triangle. So you got A, B, C, D, E. And then we were rallying up toward this high up here, which is what we've done. Looks like we got 1, 2, 3, 4, and then probably 1, 2, 3, 4, finishing up 5 here. So, maybe we make it up to 215, which is what Fibbo's looking at, but we should be nearing probably a top. And then the idea is we pull back, and guess what? From where we're at right now or higher, 50% is going to get us around the daily pivot, exactly what we look for. So, I talk a lot about different models and whatnot on our group coaching that we do. You can get involved in that at texaswestcapital.com. But I talk a lot about different models, different entry models having to do with Elliott wave and Wyckoff and pivots and even with price action, right? I set up a lot of these because here's the thing. We go and we teach y'all how and why markets move the way they do. I do that by teaching you the tools. I teach you Wyckoff, I teach you Elliott wave, and I teach you price action. But then from that, we derive from that an understanding of how and why price moves the way it does, which allows us to forecast and also to understand, accumulation, reaccumulation, distribution, redistribution, and what's going on there. Now, with all that, that's the big overarching. We do that. Nobody else does this, okay? This is what I do. This is what we do at the Trading Academy. But when you do all that, then you start going, you go, okay, so what are my models? What entry models do I use? What kind of trading models do I use? How do I approach the market? And again, that's the other kicker. That's the other side of what you're getting with us. And so, one of the models that we use is this idea of a wave 1 that rallies from, usually around the S1 pivot up through the R1 pivot. And then the wave 2 pullback is a 50% pullback to the pivot itself. And this model works out. If you guys follow me, even on here, you guys have seen me talk about it time and time and time and time again, because it works, right? It works. I'm the guy that spent, around 2009 to 2011, spent 2 years trading just pivots. That's it. Just so I could understand them, just so I could learn them. and then found out how do they work in regards to Elliott wave. And it gives us some amazing models like the one I just talked about right here. But you get all that kind of great kind of stuff out there. Okay. Bitcoin dominance continues to look good. Let me see here. Oh, what is it? BTCD, I believe. Yeah. Let's pull that up there. Here we go. Look at how great that is. I've got my wave 5 of 3 up here. Right around 60. Let me see what we got going on here. Oh, because that's where my wave 3 was. We've got a lower target here. Man, this is black on here. I can't read it. Let me see. 59.61. So that would be my initial target there. But we've got a 1 and a 2 here, an ABC, finding support there at the weekly R1 pivot and also at the daily pivot here. I love to see that. Oh, yeah, no, that'll overextend it. Yeah, I wouldn't even look at 59.61 here. Based on this being a 1 and a 2, that gives us 5 up here toward that 60.2 level. I know I got a lot of crap probably a year and a half ago maybe, talking about how Bitcoin was going to rally back above 60%. Well, here we go. It's like I got a lot of crap when I said buy solid around $9. And here we are, right? I don't take it personally. But, there is something when you've been doing this a long time, guys. There's something to be said for that, right? I'm not somebody that just started trading crypto last year. I've been doing this 30 years this year. Pretty much any market you can think of. So, you tend to learn something, during that time if you're paying attention. You sure as hell don't stay in for 30 years if you consistently get it wrong, right? So that doesn't mean I'm always right, not at all. And don't ever expect that as a trader that you'll always be right, or even that you'll be right most of the time. Go in with the understanding you'll be lucky if you're right half the time. And then that way it forces you to really be serious about your risk management. Okay. Because at the end of the day, the only thing you control, the absolute only thing you control, whether you want to like it or not, or whether you don't want to like it, the only thing you control in the markets is how much you lose. That's it. That is the only thing. So it should then stand to reason that you spend most of your time as a trader perfecting your risk management, perfecting your stop losses. Why would you spend time perfecting anything else when that's the absolute only thing you control? And when you get that, when you actually understand that, you'll see significant positive changes in your trading and in your account as an extension, because that's what you should be focusing on. Most traders don't ever get it. I have to say retail traders because that's what we're talking about, right? Most professional traders, they get it. That's why they're professional traders, right? But most retail traders don't ever get to that point where they understand the significance of proper risk management. But those that do, once you do, it changes your entire way that you look at the markets after that and how you do that. So yeah, so I believe that's what we got here. I mean, this could always turn out to be a triangle, A, B, C, D, whatever here. But ultimately, it does look like a 1. It looks like a good 2 here. We got a pullback of, oh yeah, look at 50%, just about 50% here at the pivot, at the weekly R1 pivot. We dipped just below neutral, and now we're back bullish above neutral, threatening to cross bullishly above the SMA on RSI there. Stochastic RSI curling back up now, trying to get its move back up. So the only thing that changes this is if we drop below this wave 4 here at 57.07. If we drop below that, then I'll have to come back and figure out what the count is. But for now, yeah, it's great. Wave 4 pulled back. How far here? Almost 38.2. Almost 38.2. So could potentially be done. Or if it did come down, we'd look around 56.9 and then 56.38 would be those wave 4 targets if we break down below this swing low. But until then, we continue looking higher up there towards 60.2 or so on that. Does that make sense? Pivots Points Master Course. I have to get it out there to get it sold, right? I only sold it originally at the beginning. I'm gonna, you know what? Hell, I'm gonna do that this weekend. I'll put it out there, and I'll announce it there on social media this weekend. I'll get it out there to get sold, guys, so you can jump on it if you want. I had a lot of great feedback on it. I think pivot points are probably one of the best things that new traders can do, because what you have to do when you first learn trading is you have to start looking left, right? You start looking left, but then when you look left, you have to learn how to identify where you should be looking, right? Where are the important levels that you should be looking as they're developing there? Pivot points give you like a quick move into that, right? As you're learning to look left, they give you a good idea of where you should be looking. But anyway, yeah, the Pivot Points Master Course, I kind of go through the different types of pivot points there are. I just use this one right here. These are just your traditional pivot points. I don't jump in there and I don't change the Fibonacci, Woody, Classic, DM, Camarilla. I talk about them and I discuss them and I explain them to you in the course, but I don't use them personally myself. I use traditional, but you may find that the other ones work better for you depending on your particular trade style or what you're looking to accomplish. I just learned how to really use traditional pivots really well and understand how price action reacts around it, which gives me all these different kinds of models that I work with that I often talk about here in the live streams. Sat says they are great for finding areas of support and resistance and for finding targets. I love them. Yeah, that's usually the kind of response I get from people that go through the course and they're just like, absolutely love pivots. They make life so much easier once you understand them. So I'll put them up this weekend, guys, and I'll let you know. Okay. Let me see here. What else I want to look at? Oh, here's the coin. Let's still look at coin, guys. Nothing's changed on my coin chart. Remember, we have this huge hidden bullish divergence down here from all the way back here around February through September. It's a lot of bit of hidden bullish divergence there. We broke out impulsively through the descending resistance, came back and retested support right at the pivot, pulled back into support, boom, busting through resistance. That volume starting to pick up, large candle spread. Wave 5 of 3 target here based on the height of wave 4 is up there. So we got a pattern target of 427, I'm sorry. And hitting that will then give us a wave 5 target up there around 664. Believe it, right? Okay, guys. Frank says pivots are great for confluence. Definitely. If you know, one of the best things you can do as a trader is try to understand different ways of looking at the chart beyond just your normal system that you use. Because if you can use these other things to add confluence to the support for your idea of targets or you know, stop loss levels and whatnot, it's going to make you more confident as a trader. And you have to be confident, right? Because you actually have to take the trades. So many people don't ever actually take the trades because they get too caught up. You know, paralysis, analysis, all this kind of stuff. So that's all, you know, if you have too much information, it can throw you off. But, you know, again, what we do at the Trading Academy is we set you up, right? We teach you the tools. We teach you Elliott Wave, how and why it works. We explain. We don't just say, listen, this is how 1, 2, 3, 4, 5. We talk about wave psychology. We explain to you what the market is thinking in those particular waves. And that's why the wave moves the way it does, so that you can understand it, right? But we do that because, again, when we talk about Wyckoff, we talk about price action and volume analysis. And at the end of the day, that's the end all be all to trading, right? And you can then use price action to help you really kind of zoom in on your entries to give you intelligent but much closer stop losses, which give you much, much exponentially greater returns on your profits, right? The difference, look at what the difference here. If you're getting in here with your stop loss over here at the swing low, right? To get up toward this wave 3 target, that's 9.73R. That's a pretty good return. But what if you can do this? What if you can get in at the same area? Okay. You can get at the same area, but you can move your stop loss up here because you zoom in on smaller time frames into price action, right? Concepts that we teach. Some of them are ICT concepts. I just usually stick with the more important concepts. I'm going to tell you what, guys, you do not have to know everything about ICT. You only have to know a few things about it to really be successful, okay? But I teach that as well as my own price action concepts and price action and volume concepts that I've learned throughout 30 years, right? But look at the difference here. You go from 9.73 to 27.56, all because you were able to use some other stuff to help you zoom in and focus on the real, a much more, much more precise stop loss level. There's nothing wrong with the stop loss here at the swing low. That's a good stop loss, but it's clunky, right? For new traders, that's good. That's fine. You shouldn't be complaining about 9.7%. But when you sit here and you come to the classes, you go through the courses we have in here in the group coaching, and you go through that and you ask your questions, the difference between 9.7 and 27.5% on the same trade. And by the way, either one of these trades, you're only risking 1%. So you're risking 1% to make 9.7%. Or in this case, you're risking 1% to make 27.5%. These change things night and day. And all of a sudden, guess what, folks? You don't have to use leverage. You got a lot of people out there that are trying to teach you to trade. They're like, oh, you got to use all this leverage. No, you absolutely do not. I rarely use any kind of leverage at all, outside of like the leverage that's ingrained in the, the futures contracts, because you don't have to, guys. You don't have to use leverage. You don't have to take on that extra risk. Now, if you do use leverage, you have to use it in a way in which you're not really taking on extra risk. You're just using it to decrease your counterparty risk. But most people don't look at it. They say, oh, I need to use leverage. I need to do 10x or 20x. You see people on the damn Twitter and other social media all the time. Oh, look at how much money I made. What's like some 60x trade? Well, congratulations. You got lucky. Show me that you consistently do that. Show me that that's somehow consistently profitable for you. Most people will never get to that point. Most people won't. But everybody can trade with no leverage and get successful if they know what they're doing. Okay? I already looked at MicroStrategy, Jeremy, so you have to zoom back a bit and check it out, buddy. Let me see here. Michael says, do we chop sideways until after the election? There's quite the dichotomy between the candidates and their view of crypto. In my opinion, if Trump wins, we'll get a big swing to the upside. U.S. government holds 2% of all Bitcoin. Trump has vowed not to sell that and create a reserve, while this admin Democrats have been exceedingly aggressive against crypto projects. I think regardless of who wins, I think Bitcoin goes up, honestly. I think there's more headwinds for the crypto space overall if Kamala wins. Because even though she said, oh, I'm taking a new approach to crypto, whatever, everything that's still going on with Gensler and the SEC and everything right now, nothing's even changing at this point. There isn't even a, hey, guys, listen, can you tone it back a bit so it looks like I'm being honest with everybody out there? There's not even none of that, right? So I think there's headwinds there. Will Trump actually create a strategic reserve? I don't know. Remember, most of what either candidate says are just talking points just to get elected. They're trying to tell you the things that they think you want to hear. But I think either way, regardless who gets in there, the fact is the government's going to continue to spend. And if we look at liquidity as the underlying basis for asset valuation, right? The idea that continued spending by government means more printing of dollars, and euros and yen and yuan and all that kind of stuff, right? It's more printing. As long as governments continue to spend, they're going to continue to print. And that's what debt-based economies do, which is what we all have here in, all these major governments. Because you're not going to take out debt and pay back with today's dollars or yesterday's dollars, right? If you're taking out debt, you want to pay it back with cheaper dollars in the future. And the only way you get cheaper dollars is to print more of those dollars, right? So that's basically it. Now, do we trend sideways to there? Again, as I mentioned at the beginning, I think Bitcoin, I think we're doing a leading diagonal here, which would mean we'd rally up near the all-time high and then pull back and then break out. And I believe that would probably be sometime in November, most likely after election, that we'd get that breakout to new all-time highs. The only thing that would change it again is on, as I talked about Bitcoin earlier, if we happen to be doing a triangle locally here, then there's the possibility we could see a breakout at the end of October or even the very beginning of November. And it would be an impulsive, strong breakout because it's a triangle that would be completing right now. But to me, that's the secondary idea of what's going on. I think the more likely idea right now is that we've got a leading diagonal printing. So again, new all-time high, probably sometime in November, if we look at that. Okay. So that's what I'm thinking there, Michael. Okay. AVAX USD. Let me see here. Whoops. XUSD here. By the way, guys, I think I might do something crazy this weekend. I might. I'm thinking I might. You buy a year of group coaching. Instead of it just being a year, it's a lifetime of group coaching. And that'll include our Traders Club with that. I think I'm going to do that this weekend. See who's really serious about learning to trade, right? But that will be, for as long as we continue to do group coaching and Traders Club and all that fun stuff, you'd have access to that and just paying the normal yearly group coaching thing, because I want to help people trade, right? I want to help people do it. And I think that would help. Yeah, I think I might do that. So if you're interested in something like that, pay attention, guys, to the social media this weekend. And I'll let you know for sure, but I think I'm going to do that. It'll be a limited time thing. So just understand that. But if you get it, man, oh man, do you lock in some craziness. Can't believe I just said that here without making the decision for sure. I'm going to forcing myself to do it. Oh, good times. It's all right. It's all right. I might just limit how many people can do that. Maybe that's what I'll do, is do a limit to how many people can do that. That way I'm not completely screwing myself here. I think this is what we're seeing here. It looks like a flat completed. Yeah. ABC 1, 2, ABC 3, 4, ABC 5 here. And I think what I'll do with that as well is, if you've bought 3 months, 6 months, 12 month in this last year, I'll let you subtract that from the price. You'll have to get a hold of me because I've got to give you a code to do it. But I'll let you like if you did a 3 month, which was $1,500, $1,497 or whatever, I'll let you subtract that from the annual price, and you just pay the difference. Man, yeah, okay. Dude, that's crazy. I can't believe I'm going to do that. But I'm going to do that. That's what I'm going to do. So I'll post it this weekend. I may limit how many we do on that. First come, first serve. But, again, for people that are there, they tend to find a lot in it. Looks like we got 1, 2, 3, 4. Looks like we're getting a 5. So here with AVAX on the weekly, looks like we're going to rally up into this wave 4 resistance. Weekly pivot area up here around 32.29, or maybe even just wick out just above it. I think it's where we'd be. It's we get a wave 1 done, a wave 2 pullback. Let me see here. Oh, there we go. So based on the pullback here, the height of this wave 4 pullback, that would give us a 36.21 target. Right there, kind of at the peak of the high volume node there. So we could potentially see a move that high. 1, 2. If we did get that, 50% would get us right into the, we have this fair value gap area, then we have wicks through it. So, I mean, it's a good area, 50% of 25. Where does that take us from here? Oh, this is beautiful. I love this. Let me do it like, why don't we just do it like this? 3, 4. Gives us 5 waves up here, right around the previous all-time high there. For this larger count, what would we be looking at overall? So 302 would be a wave 3, 594 would be a wave 5 if we were to do that. If this was only going to be an ABC, we'd be looking at 101 to 154. But that 101 is right around that 108 area. So I would definitely ultimately probably, look for the 1 and the 2 pullback. If we can get that, be looking up there around that 101, 108 area. Definitely as a target. So from wave 2 pullback, we get a wave 2 pullback at 25. That would be a 4x on that rally there. But you see on the daily here, we're overbought on stochastic RSI. RSI is finding some resistance there at neutral. So it looks like we'll probably, we can get, this is the weekly, I'm sorry. Get a little rally up there, but look at that daily. Yeah. So 1, 2, 3, 4, and then heading up there, potentially as high as 36.21 or so, and then getting that pullback. Yeah, I like that. Daily looks pretty good. We're just now, we broke out, came back, retested as support, broke out bullishly, stochastic RSI there. RSI has broken out back above neutral, so it's back bullish above neutral. We had a nice pin bar candle printed yesterday, right here, right to the support area, little doji. We're breaking out higher here, larger candle spread, trying to break out. See if we can get this volume to increase with it on that. But I like the way it's looking right now. So overall, it looks pretty good. Jason, what's up, man? You're going to buy what? You asked about which one on the live session? Trying to catch up with you, man. I won't forget about the pivot course there, Chris. Thoughts on FXS USDT? I can do that one last one, and then I'm going to have to get out of here. FXS USDT. Yeah, I'm old. That's original Nintendo music right there. Oh, the pivot force. Okay, took time to explain the base. Yeah. Okay, Jason, I know who you are, man. I know who you are. See, when you guys use different names on different things, I have to pay attention to figure out who you are. I got you, buddy. How are you liking that group coaching so far, Jason? How are you liking it, man? Because you, I think you just joined, didn't you? Not too long ago, sometime within the last week or so, maybe. Let's see here. Okay, I like that breakout, I think, here. Let's see here. What'd you say? I can't sleep. It's 3 a.m. Been a week or so. Endless information, endless. I like that, man. Yeah, yeah. But that's the idea, right? We're not just trying to teach you guys some little technique that may or may not work. I'm trying to help you guys understand how and why markets move the way they do. Because once you understand that, you can create your own strategies. You can use other people's strategies and see when they're likely to work or when they're not, because no strategy is 100%, right? I mean, it just opens up the entire world. It's literally like seeing the matrix in the market when you do that. Oh man, these people, why do they come in and do their nonsense? No, Andrew, I didn't talk about STEM. I'm going to post it into hot takes. So if you're a C3 member or if you're a group coaching member, you'll see our STEM trade in there. We talked about that I think in the price action training on Wednesday. Yeah, look at. Jason says, I took the STEM trade. It was incredible. It went over the real time. It's up like 20% now, I think. The chart looked like it was going to zero. It's what we do, man. It's what we do, right? Back to FXS here. Let me see. I don't think we got divergence at the low there. No, it's just low lows there. We're kind of hitting this area of resistance and support here on RSI on the weekly here. See that support resistance? We definitely want to get above that. I like the breakout and retest. It's possible, again, like everything else, you guys are going to notice this across most alts. You're going to see it looks like this. We've got 3 waves up right now. Potential leading diagonal playing out, but you need to get one more push up higher. So I could see us maybe breaking out a bit higher here. I'm going to zoom in a minute. Give me a minute here. Let me see here. So based on the height of this, what's this pullback here? We could potentially see, let me just make sure where we are with wave 3 here. Yeah, that's fine. We potentially see a $2.88.5 target area that kind of sticks us in the low volume node here, right here in this weekly fair value gap. So we could potentially see a boost up there and then a drop back. Like everything else, if this is a leading diagonal going on here, then what we should expect most often in this case would be a strong rally up through here, impulsive rally up, and then a strong rejection back down before it takes off again. Because that's the way that that diagonals tend to play out. You tend to have a strong rally into the end of the diagonal, into the 5th wave of the diagonal, and then a strong rejection. And often that strong rally is a throw over of that ascending wedge resistance or a throw under of wedge support. Right? So usually you get that and then you get strong, move back to the other way. Let me see, where would that be on that pullback? Yeah, we could pull back right about here. 50% pullback and take us back up. I would watch this. I want to see a breakout higher in here. Let me zoom into the daily. All intervals. Let's jump in there. Let me see here. Chris says, I always miss the group coaching live hours, but I love watching the replays. And that's important, guys. We realize a lot of our members are from other sides of the world. We got a lot of people from the Netherlands and the UK, and we've got people from Chile and Mexico and Australia, New Zealand, Japan. So we got people from all over the world, Czechoslovakia. And so, I try to make it as accessible as possible, but the best part about it, we always record the live and then you can watch them and ask questions if you have them afterward, if you can't make the live. So, there's always that option there. Or even if you're in the US and you're just busy, right? and you can't maybe make it live. The option is always there to watch it and then to ask questions afterward. I'm big about asking questions, guys. This isn't something where you jump into group coaching and you can't ask questions. I want you to ask questions, because the way you learn anything in life is if you have a question and you don't ask it and you don't get an answer, then you never know. And what the hell? What are you doing then, right? You need to be able to ask questions. If you're getting educational content from somebody, you need to be able to ask questions. And consider it a big red flag if you're doing that and they say, oh, no, you can't ask questions. You know, if you're in some kind of group coaching or one-on-one coach or whatever, and they're like, oh, no, you can't ask questions, or they ask like it's a chore to answer the questions, it's a big red flag. That's what we do. If that's what we're offering, that's what we're doing. We're trying to educate you. If you got questions and we're not answering it, then we ain't doing our damn job, right? Seriously. Look at Frank. Frank says even Switzerland. Frank's there in Switzerland. I love it. I love it. So yeah. By the way, Andrew here, you guys are seeing Andrew Bennett talking over here in the comments. He's one of our head traders there for the Traders Club. And so it was actually a chart that he asked about that I, went there and kind of deconstructed and looked at and talked about targets and whatnot on that. So yeah. JD says, Elliott wave is so complicated. The questions are coming. Don't you worry. Honestly, it's really not complicated. It's just a lot of rules and a lot of guidelines. You will notice once you memorize the rules and guidelines, your questions go down a lot. At first, it's just because there's, oh, well, this says this, but then what about this? You have to remember a lot of things. But once you get through it, you just start rattling it off. Life just comes so much easier. So there is a little bit of a learning curve with Elliott wave with the memorization. And then, of course, I always talk about all the other things about, well, if it's doing this, then you should look, it's probably going to do this instead of what we normally expect. And that's all the best, because everybody gets out there and say, okay, listen, this is how you do Elliott wave. Wave 1, wave 2 pulls back 61.8. Wave 3 is 1.618 of wave 1. Wave 4 is a 38.2 retracement. Wave 5 is here, right? But you have to understand how to approach it in context of the chart as it sits at that time. And I do a lot of that every week when we do our hour-long Elliott wave sessions. So yeah, 100%, man. Like eating an elephant. How do you eat an elephant? One bite at a time. Damn right. I love that. Yeah, Angie says he was the same way. Only complicated at first. You're going to learn it. Yeah. Exactly, guys. Exactly. But as we look here, one more time, getting back to FXS here, I'm enjoying talking with you guys. I've got to go. Unfortunately, I've got something I have to do. But, I mean, I love how this looks right here. The breakout here isn't as great as I liked it to be. I think I probably would look more at this resistance. Yeah, that's the one I like right there. This is the proper resistance on the breakout here. Swing point, swing point, swing point, pull back into support here. Breakout, got some volume picking up, larger candle spreads. Peaked out just above the previous, pull back. Let me see here. But yeah, I mean, this is what we're looking at. So, WXY, ABC here. And then we look for it coming up again. Based on the height here, we'd look for this target up at 28.85, but it's also possible we could just get around this R1 pivot area around 25.4. So I would look initially around 25.4 to 25.8. 25.6, this kind of area right here. And if we can get through that area, then I would look higher up at the pattern target up there around 28.87. Either case, would look for a pullback down around the pivot or this swing low area here. So probably, oh yeah, look at this. See this right here? The resistance support right there. Yeah. So again, I think we probably get a breakout. Either we're going to hit this area, pull back here, and then go, or we're going to pull through this area, continue going up here, pull back to the pivot, and go. So either we get rejected just around the R1 pivot a little bit higher and come back maybe a little bit below the pivot there and then go, or we head up to the R2, pull back to the pivot and then go. That's the way I'd be looking for it to play out. The only thing I don't care about the FXS here is how high we already are with the weekly stochastic RSI. That's the only thing I really don't care for at the moment. I think maybe you could make an argument for a 1, 2, 3. Maybe 4 and a 5 here. It's kind of getting a bit stretched here, but this would be like a B, C, D, E triangle here for wave 4. It's pretty big. It's kind of iffy on it. You know, when you compare it to how long wave 2 was, much shorter period of time, really extended here, but potentially it. And then we get a 1, 2, 3, 4, 5 here to finish it out. So yeah, I think there's a chance here. We just have to make sure locally that it does what we're doing here. And then we can look for maybe that move up higher. Take that out. But we definitely have to do this stuff on the lower time frame first before I'd really even think about the bigger picture right there. Yeah, risk reward would be pretty good because you're pretty close to, you know, those lows. By the way, which is why, you know, in our group coaching, why I, you know, spend a lot of time talking about identifying accumulation and reaccumulation ranges and understanding cycles. Because if you can get in, if you were smart enough or, you know, brave enough to get in around 16, 17, 18,000 on Bitcoin, when I was saying it looked like the low was in there, right? And you've rallied up, you know, 70,000 and potentially up to 100,000 before the end of this year, right? So, I mean, it's been a great, easy trade. Your risk management is there because your stop loss is so close. It gives you a lot greater return than if you waited for 25 or 30,000 to break, right? Same thing for buying, you know, Solid at $9 and some change, or buying Link at around $5.50, right? You can get your stop loss because you identify those areas as the lows, especially in terms of cycles. You identify the lows and you can get trades in for the entire cycle. You don't just set and forget. Your risk management is set great. Your stop loss is really close to your entry, and it gives you an exponentially greater return. So yeah. When do the hourly, daily, and weekly pivots reset? So your weekly and monthly are the same pivots. They reset every year, January 1st. Your daily pivots, the ones that show up on your daily and your 3-day are basically the same. They show up each month. So on the first of each month, they change. Your hourly pivots, 1 hour, 2 hour, 5 hour, 8 hour, 12 hour, whatever, reset every week. So on Monday of every week, they reset. Your 15-minute, 5-minute, 15-minute pivots reset every day. And this is all UTC time. So when you get to the next day on the UTC time, the next day for your 15-minute pivots, Monday, you know, 12:01 a.m. UTC, you'll switch for your hourly and whatnot. So that's how it works there. All right, guys. Let's see here. JD, have a great day, bud. Let me see here. Oh, I need to get out of here, God dog. Let me look at Bitcoin. What's Bitcoin doing? It's going, man. That thing rallied. Oh, I'm going to be honest. This thing is stronger than I thought it would be coming off the low. We've hit the daily pivot, though. Man, oh, man. I mean, the hourly pivot here. Can we get it rejected here? We just need to get above this swing high at 64,461.08 on this index chart, Bitcoin all-time index chart, to kind of indicate that the low is likely in. Man, I don't know that we break out through this thing. We definitely have resistance here. If we were to get rejected here, 50% gives us the daily pivot. I love it. We want the daily pivot to hold overall. Look at this volume profile coming in here, though. Look at how it's kicked up once we broke through this resistance. You needed more volume to break through it because more supply was coming in. That's what we did here, though. Boom, 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 and boom. So you still got a lot of supply coming in, which is why you have these smaller candles. Right here, right here, right here. Actually, right here and right here. Yeah, the small candles, we still have the strong volume coming in there. But yeah, man, it's been a great move. How far are we up today? Or since yesterday's swing low? 6.65%. Wow. It's been a good run. If we can get a rejection here at the hourly pivot, I want to see a pullback to about 60,830 or so, the daily pivot. And then I'm going to look for a long. I'm going to look for a reason to long off that. That's what I'm looking for. But we'll see what happens here at the hourly pivot. We'll see if we continue going up higher. If we do, we just want to see it take out this swing high up here. 64,461.08. And that will signal that the low is likely in here. And more likely than not headed up for a breakout higher here above wave 3 at 66,524. Does that make sense? So, yeah. I would love, I mean, honestly, guys, I'll be honest with you. I want to see a pullback here. That would be the best thing that could happen. But man, oh man, if we continue rallying up closer to this swing high here, I think we'd likely just get a pullback into this fair value gap here. So we got our block here. Maybe something like that. Yeah, look at that. So if we end up getting that push out there, 61,470 maybe the area we get. That's right at that low volume node right here in this fair value gap on the 4-hour. Fair value gap steps right above here. By the way, this fair value gap inverted this bearish fair value gap. So we got an inverted fair value gap now in this area. So yeah, if we can get that breakout closer to 64.1 or 2, I would look for a pullback into this fair value gap here. Probably closer down toward this 61,680 to 61,380 area on that. Go to TexasWestCapital.com. Join us. Take the year. Take the annual. And I will convert it to forever access to our group coaching and our, which includes our Traders Club as well, which is, again, every day the trades that myself, Mr. Andrew Bennett here, Mr. Vince, and Mr. Fibaswani take throughout the week, as well as updated market analysis throughout the day, market update at the end of the day that I do, which includes, gold and stocks and in stock indexes, Bitcoin, crypto, stuff like that, all that kind of stuff. It's a 20-minute thing usually that I do every day. So check that out. But anyway, that'll be it, guys. I am so late. I got to get out of here. I appreciate you guys for sticking around, checking these things out. Loving what I'm seeing with Bitcoin at the moment, but we've got our levels that we need seen. Things need to be done. All right. As always, remember the only thing you control is how much you lose. So please keep working on that risk management. I really just hope you guys have an amazing weekend. Y'all trade safe out there. Take some time away from the charts. Get a little clearing going on in your head there. I promise you it'll make the charts look a lot better when you do. Other than that, you guys have a great weekend. Hopefully I'll see you guys inside TWC. Take care, everybody.